2018 was a tough year for fund managers. That's the word coming in from Swarup Mohanty, CEO of Mirae Asset Global Investments. Moving on to the year 2019, he maintains his bullish view on the equity markets.
Overall, if you look at the underlying, which is both equity and debt, both have seen phenomenal ups and downs due to the economic factors you mentioned, and you don't take away the credit part which happened on the debt side too. So overall, a very tough year for fund managers, but I feel the industry has also held up in this entire year. We've not lost dramatically at a fund level, and accumulating equity throughout the year will augur very well for the future wealth creation of all investors.
You are confident that the industry overall will be able to generate alpha and deliver much superior returns compared to other asset classes for the investor?
You see, the asset class of the future and present remains equity. There is no doubt or debate on that. If you look at the richest people of the world, the new asset which all of them own, and it's in common that they all own equity. And they've made money because of staying invested in this equity class, in this asset class I mean. So there is no doubt or debate of the asset class that you are in. And companies are made over a period of time. One has to remain invested in those companies over a period of time to get the real benefit of those companies. You leave it to the fund manager to choose which are the good companies. And let me tell you, after 20-25 years of fund management, the Indian mutual fund industry from a fund management perspective is at a different level. The fiduciary responsibility is definitely intact. In investors' wealth creation lies our future, and I think we will stand up to that.
Sure. And, let's talk about something which is more recent. The regulator has now put a cap of about 2.25% on the expense ratio that an open-ended scheme can charge. One is, from a manufacturer's perspective, how do you view this, and how is it beneficial from an investor's point of view?
See, cost debates are, part of every industry. And wherever there is a scope of reducing costs, it should be got off. The lawmaker is the regulator, and they felt there is scope for reduction of costs, and that is what has happened. As business owners at the AMC level, we have to realign to this new cost. It's good for the investor because they now will getting the same product at a lower cost. So, we have to find ways of doing business within this new cost regime. I'm sure we will find our ways. Most of us are already anticipated this, so we are ready for it. And then overall, it's a good new regime, and it will be good to see how it unfolds.
Sure. One final question, your message for the investors in 2019, and what's your personal outlook or, as a fund house, the outlook for 2019?
We remain pretty bullish on the equity class, asset class, and we've seen that over the period of time all our funds have performed. So we stick to our asset allocation, and we are a fund house which does not take cash calls. That shows our conviction on the asset class.